After 3 weeks of consecutive gains for all 5 major markets, they pulled back, with all 5 indices ending slightly lower for the week. Crude oil dominated the news going into the week after last weekend's attacks on Aramco production plants in Saudi Arabia. Twin attacks took 5.7 million barrels of oil production offline, sending prices significantly higher at Monday's open. However, crude oil futures fell on Tuesday and Wednesday before settling around $58 on Friday. Since the attack, conflicting reports have come out around how long the facility's repairs are anticipated to take. Pictures of the damage swept the news Friday, along with reports that enough repairs could be made and full production restored in about 10 weeks' time. However, the Wall Street Journal reported on Sunday that some Saudi officials and oil contractors said that the repairs could take months, not just 10 weeks, to restore operations. Yet Reuters came out Monday morning stating that 75% of oil output has already been restored and that full production volumes could be out before the end of the month. In domestic news, the FOMC held their September meeting midweek. During this meeting, the Federal Reserve voted to lower the Fed funds rate by 25 basis points for the second time this year. The target range now sits at 1.75 to 2%. While this was initially seen as positive news for the equity market, the Federal Reserve of New York needed to step in earlier last week to maintain the overnight lending markets and the effective federal funds rate. The Federal Reserve intervened by injecting billions of dollars into money markets through repurchase agreements. These transactions, more commonly known as repos, are a type of short-term lending, typically on an overnight basis, in order to maintain liquidity in bank reserves. This marked the first time since the 2008 financial crisis that the Federal Reserve needed to take such actions to preserve the liquidity and stability of money markets. However, Powell said on Wednesday's post-meeting press conference, "While these issues are important for market functioning and market participants, they have no implication for the economy or the stance of monetary policy." But as of Friday, the Federal Reserve announced that these repos would continue every day until at least Thursday, October 10th.